Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. The pair that I want to speak about today is NZDCAD, and the reason for which I want to speak specifically about NZDCAD is because it is very near to providing a very good trading opportunity. So obviously I want to share the current situation of the market and how we can be looking to capitalize on the next move. And obviously I also want to keep the analysis as educational as possible so that I can share with you guys some very important concepts when it comes to finding opportunities in the market that will dramatically increase your trading performance. So let's start from the technical side of the market. We will then go and see what we have from an order flow perspective on the NZD and on the CAD. So basically what hedge funds are doing at the moment on these two currencies. And this obviously helps you gain an advantage over your competition in the market, because if you're able to trade alongside with institutions, you obviously have an advantage over the other players in the market. And by the end of the video, you will know exactly what kind of opportunity we can be looking for on NZDCAD. So let's start our full analysis from the monthly time frame. Now on the monthly, what we can see. Now, from a monthly perspective, we can see that the market has just broken above a very important structure area, which is this structure area. The structure that I'm speaking about is this dynamic resistance area, which was given by this bearish trend line. In fact, this trend line was respected by the market in multiple occasions, confirming it as an extremely strong structure area. The market then broke it to the upside with this very strong impulse. And after a resistance area is broken to the upside, as usual in the market, it is turned support. Previous resistance is turned support. So the market broke it to the upside, and at that point, all this area was turned support. The market went and retested the support and started this rejection to the upside. Now, if we look at the market also from a horizontal structure perspective, we can see that here we didn't only have the retest of this bearish trend line, but we also had horizontal structure. In fact, we can see that from a monthly perspective, we had this previous monthly resistance, which was resistance here, now turned support at this area. So already we have found two confluence layers of support at this area. Previous resistance now turned support, and this trend line which was resistance and is now turned support. And what we can also see is that in general, if you have an impulse in the market and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of the impulse, we can see that the market retraced exactly to the 0.382 of the Fibonacci taken on this monthly impulse, therefore testing exactly this confluence of support and confirming a monthly close above the horizontal structure. So at the moment, from a monthly perspective, this pair is extremely bullish, and we would like to see the market create a higher and stronger rejection to the upside for the creation of a higher high. So we would like to see the market create this move to the upside. Going down on the weekly, what do we see? Now, from a weekly perspective, situation is quite clear. We have a market that has the possibility to create an inverted head and shoulders at this area. In fact, what we can see is that this zone was acting as strong support here. The market broke it to the downside, broke back above. At that point, this previous resistance is now turned support here. And what we can expect is a retest of this area before the continuation to the upside, which is exactly what the market is currently doing. Now, what we can also see is that the last weekly candle is this candle here. Now, when you see a candle like this, what you do expect is the next candle to fill in this wick. So from a weekly perspective, we would like to see the market create a move to the upside, filling in this weekly wick and creating the continuation to the upside. Going down on the daily, what do we see? Now on the daily time frame, we can see that situation has been very easy to read lately. We spoke about NZDCAD quite a few times in the past. We spoke about it after the market had created this W formation. In fact, when the market was here, I made a full breakdown of NZDCAD explaining all the reasons for which from here we first wanted to see a move to the downside to complete the pattern at the neckline of the W formation. And then I made another breakdown of NZDCAD when the market was here, explaining all the reasons for which we wanted to see the market create this continuation to the upside. And then made another breakdown of this pair when the market had created this overextended W formation, explaining all the reasons for which from here we wanted to see the market create this nice move to the downside. Then again, I spoke about NZDCAD when the market was here. We wanted to see the creation of this head and shoulders. Then the market created with the very last analysis that I performed, this overextended W formation. And this is the very last time that we spoke about NZDCAD after the market had created this overextended W formation. When the market was here, I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside, which the market has just completed right now. We wanted to see this move to the downside to complete this overextended W formation exactly at the structure area that the market has just tested. And now, what is the next opportunity that we can currently be looking for on NZDCAD? Just a quick reminder, make sure you comment below and let me know which pair you would like me to cover for a trading opportunity in next video. Now, first of all, you find all this previous analysis linked in description. You find everything linked below, so you can go and check it out for further reference and more free education. But at the moment, what is the situation, how we can be looking to capitalize on the next move? Now, from a daily perspective, as we have already identified, we have a nice impulse and correction. And after an impulse and a correction, what you want to see is the continuation to the upside for the creation of a higher high. What we can also notice is that currently we are testing quite strong structure. In fact, this area was acting as a very strong resistance, and this previous resistance is now turned support here. So we have previous resistance, now turned support, which the market is testing, and from which we do expect a rejection to the upside, possibly a very aggressive rejection to the upside for the creation of a higher high. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse, and we can see that the market went for a perfect test of the 50% of the Fibonacci taken on this impulse before getting rejected to the upside. Now, the 50% was lining up perfectly with the confluence of support that the market had at this area here, previous resistance, now turn support, from which we definitely did expect the market to get rejected to the upside. Now, before I show you how we will be approaching this kind of situation with students for a trading opportunity, let's first go and give a quick check at what we have from a COT perspective on the NZD and on the CAD. So what hedge funds are currently doing on these two currencies. Now, from an NZD perspective, we can see that net positions have been increasing lately. We went from 3.3k net positions all the way up to 6.9k net positions. So net positions basically more than doubled with the last reports. So the positioning from an institutional perspective has been shifting to the positive side of the NZD, with longs reaching 22k as we currently have and 15k shorts as we can read. So currently we have way more longs than shorts, with a lot of longs getting added. In fact, it's been quite a long time that we had such an amount of longs on the NZD, 22k long positions. And if we go and see what we have from a CAD perspective, what we can see is that 900 shorts got closed with the last report, which is not good, because what we do need is a weak CAD if we are to be creating this move to the upside, meaning that we want to see more shorts getting added, not closed. However, if we look at the bigger picture, what we can see is that currently we are still quite bearish on the CAD. We have 42k short positions, 24k long positions, so definitely still more shorts than longs, with minus 18k net positions, which is definitely more bearish than the 13k that we had here. So we have seen some shifting to the negative side. So CAD is still quite weak. Not the best thing, because we would like to see shorts getting added, but still enough weak to provide this move to the upside. So how we will be approaching this situation? Now, as usual, trading is reactive. trading is not predictive. And the monthly, weekly, and daily time frames combined with the COT data are the best time frames when it comes to the directional aspect of the market. But the best time frame when it comes to confirmations and entries is the 4 hours. And at the moment on the 4 hours, what we can see. Now at the moment on the 4 hours, we can see that we don't have any sign of confirmation for a longing opportunity. In fact, the market has been creating lower lows and lower highs, and it has been in a very strong bearish environment and bearish structure. And until the market will be this bearish, we absolutely cannot be looking for any kind of of longing opportunities, because the market is clearly a bearish market. So shorts are favored in this kind of situations. So we absolutely cannot be looking for any longs yet. So what will happen is that if the market will remain as it is right now from a 4-hour perspective, the market will easily break below this support. However, if instead of this area, we will see a nice accumulation phase starting, and we will see from a 4-hour perspective that the market is shifting from a bearish market as it is right now to a bullish market, at that point, what we will be doing with students after the market has shifted from a bearish market as it is right now to a bullish market, only at that point, we will add NZDCAD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and completion to complete this impulse, correction, and impulse pattern to the upside and create a higher high and reject obviously the monthly confluence of support that we have identified at the beginning of the video. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.